Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Kim Knickle, ESG and Sustainability Research Director at Verdantix. We have Doron Merdinger, founder and CEO of Doroni Aerospace, and William Theisen, CEO of North America of EcoAct. They join me to discuss climate risk, the role of technology in navigating the regulatory environment. It is great to have everyone with us. Welcome to TradeTalks. Let's go around the horn here. Kim, we'll start with you. Give us a brief description of Verdantix.
Great. Thanks for inviting me to be here. Verdantix is a market research and advisory firm. We specialize in understanding all things sustainability related. Really, I see our role as understanding the environment that businesses have to operate in, whether that's the business case, their customers, the regulators, and then to try to connect that with what we understand of the software and services that will help them understand their problems, their challenges, and in this case, it's everything to do with climate.
Right, and Doron?
I'm the CEO founder of Doroni Aerospace. We are a Florida-based company developing a personal flying car, an eVTOL, electric vertical takeoff and landing, for personal use and also for military, cargo, and other applications. All about sustainability at that point.
All right, and William?
I'm part of a global climate change consultancy firm where we're working with Fortune 500 companies, large multinationals, publicly traded and private companies on their sustainability journey. So achieving net zero, and that includes everything from GHG assessments, reduction strategies, target setting, and also climate risk assessments. And we're also using a lot of our technologies to help companies assess their climate risk.
So this is newer content for us to tackle on TradeTalks, and it really does sound fascinating. So if we could just kind of get into the basics here. Tell us about climate models, why time horizons are important as you assess these models, and kind of put it in a broader context for us.
So, historically, now there's regulation coming into play, but historically, a lot of investors have been asking companies to voluntarily disclose on if there are any climate risks within their operations. So this is looking at taking a new lens, putting climate on it, and looking at both short-term, medium-term, and long-term chronic and also acute physical climate risks, but there's also transitional risks. But I'll really just kind of focus on the physical risks right now. So when we're looking at acute and chronic, this can be anything. Acute will cover anything from wildfires. It will cover anything from hurricanes, and then things that are more going to be chronic are going to be heat stress and water stress, something that happens over a longer period of time. And what investors really want to know is, are these being addressed? What is the vulnerability and the exposure of these companies to climate risk? And how are they mitigating and or adapting to address these climate risks in the future?
Right, Kim, what's the gap between global models and local risks?
Yeah, so some of this, William has done a good job of laying out who's driving the push for more information, investors. But if we look at the history of climate models, they come from the academic and the government world. That means that they have different priorities from businesses. They've been very much about large scale, long-term type of modeling. Makes sense. The models themselves also require significant compute power, lots and lots of code, and so it's not the kind of thing that necessarily private entities or businesses have really been able to create themselves. So we've kind of reached this point where the old way of doing climate models is not the new way of what we need climate models for. And so we're trying to address that gap through different techniques. So taking these models that are for larger scale, trying to figure out how to bring them down to smaller scale locations, shorter time horizons, all of the things that are important to businesses to make decisions about the climate risks that they're facing today and will face over the next 5 to 10 years and even further out.
Right, and Doroni, let's talk about product here for a moment, because the transportation sector, it's a significant contributor to carbon emissions globally. What will Doroni technology, how will that help to mitigate it?
So Doroni basically is a natural evolution of an EV going into the three-dimensional space. In our case, you don't need a runway, and also you don't need roads. And by that, we're protecting the ecosystem. Essentially, some cities you cannot even add more roads, like New York. There's just no other way to get a close. And again, charging, all electric, very quiet, low noise levels. So this system is really will work with the EV technologies already in place, and this is really a bright future that what we're looking to achieve.
Is the infrastructure in place to be able to support the power that these type of vehicles or aircraft?
Yeah, it's already in place because we have all these electric vehicles, and we can also charge there as well. And there's also all landing pads and vertiports that are that are being developed as well, as long as other places you can land and take off as well.
Yeah. Let's talk about the rising climate threat. Seems to be somewhat of a polarized issue here. Where exactly are we in terms of?
So the data sets are actually increasingly coming with increasing precision. So like when we're talking about kind of what Kim referenced, like these longer term models, like we're looking at 2100, that's very far in the future. They may be less precise, but now the actual data sets that are kind of informing on climate risk are getting a little bit more precise. So they're going down to regional climate models. And then there's a lot of satellite data that's coming into play. And so now companies are looking, like when they're thinking about short term, they're looking up to 2030 and 2040, up to 2060 for medium term, and then 2100 for longer term. But really it's all about like kind of how they're taking that data, because there's a lot of technology that is kind of coalescing this data, really informing. You can kind of put your GPS coordinates in for all your manufacturing sites or where you're having all your business operations. But really what needs to happen is there needs to be more context on it, because some of that data has more confidence than others. So for instance, heat data over the long term has more confidence with the results that are coming out from these fact sets and data sets than precipitation. Precipitation is less, it's more difficult and more challenging to actually predict exactly what's going to happen with precipitation versus heat waves.
Right. And Kim, this is not something that organizations have the luxury of making a choice. They're going to have to remain in compliance because there's a regulatory environment involved with this as well.
There's a lot at stake. So first, I think we should think about the scope of the big, just how big is at stake here, the money.
Right.
And NOAA's National Center for Environmental Information put out a report in January that there were 28 extreme weather events with more than $1 billion of economic losses. So the total for 2023 that they estimate is, I think it was $93 billion, staggering amount of money. Swiss Re did an estimate of the global impact of economic losses related to extreme weather. It was 3 times that number. And in fact, the pace at which we are experiencing these extreme weather events is escalating significantly. I think Swiss Re said that in the last 30 years, it's doubled. They expect the economic losses to actually double again in just 10 years. So we're talking about change that needs to happen really quickly. When we're talking about other kinds of risks related to this challenge, the regulatory side is really interesting because we have the SEC, which is relevant for US public companies, and California has said anybody doing business in California has to comply with this as well. So that's private and public companies. And the expectation that's baked into these regulations is that they're going to have to, in their management reports, so in their financial reports, indicate exactly how they are addressing climate risks. So what are the climate risks for them? How are they going to mitigate them? How are they going to adapt because of them? As well as what are the costs that they have incurred because of extreme weather events? So we're really shining a light on just how big a problem it is, as opposed to me quoting numbers from Swiss Re and NOAA.
So what's an example of mitigating climate risk? Is it moving, let's say your primary operations are in an area that's prone to erosion from the water, or wildfires in California as an example. Are you going to be required to lay out a roadmap of the risk involved there?
Yeah, exactly. And you're going to have to basically detail what the risk is, the vulnerability to that risk, and your exposure to that risk. So the financial impacts that are going to be due to that risk.
Material.
So,
material is the word.
Yeah, exactly.
Yeah.
Right.
So, and this is what investors are looking for. And investors could be, people that are buying stocks on the market. They want to be informed if a company is going to be resilient. But indeed, like when we're looking at companies that are sourcing different raw materials all over the world, those different raw materials may be subject to different heat waves, different droughts, different flooding. And so companies need to have an action plan in place, an adaptation or mitigation plan in place to say, okay, well, if this is likely going to happen in the short term, medium term, or long term, what is our action plan? How are we going to mitigate or adapt to these different risks that we're identifying?
Right, and Doroni, in addition to zero emissions operations with your product, reducing noise pollution, is that part of the equation as well?
Yeah, definitely, and also you don't have to destroy our ecosystem to create new roads as well, which is something very, very important. In South Florida, you see they're building a new roads one on top of the other.
Right.
Why do you need that when you have the corridors up in the sky? We have already a system that is very accurate. It's proven to be very safe and sustainable. You can use and basically create the roadways in the sky, if you will.
Yeah, and this is really interesting just because like when we think about climate risk, a lot of times we're thinking about the physical side, but there's also the transition risks, right? Like, so companies are looking at how their products are going to be more competitive as the climate changes. So like whether there's a risk and or opportunity in that. So let's say you have two competitors in the market, and they're both making something similar. If one is actually transitioning to a low carbon technology, that is going to be more resilient as the climate changes, and there actually may be more demand for that. So we don't also, when we're talking about climate risk, we don't only focus on what physically is going to happen with weather events. We're actually talking about the wider question of the actual marketplace.
Yeah, well, Kim, it sounds like you need a whole new team, right, of climate experts. I mean, do we have the skills gap? Is there a skills gap?
There's a lot of transformation that needs to happen in the business. So the one that you've just identified is, yes, we absolutely need people with climate risk skills. When we look at the enterprise risk management processes, the enterprise risk team, they're usually, they have their own team, they have their own schedule, they're focused on compliance risk, legal risk, operational risk, strategic risk. So they have their own kind of definition of risks, and it's on a 3 to 5 year planning horizon. In comes climate risk. There is no way you can work on a 3 to 5 year.
Right.
Yeah. And then it's the skills, right? So the skill set. We've estimated that there are about 12,000 climate skills climate risk positions that are open, more than the actual number of positions that exist in the world. So what are we going to do about it? We're going to institute some professional training programs. We're going to upskill our own people. We're going to teach people who are in the job to learn both about the corporate and about the climate skills and bring them together. There's a lot of work to be done. We do also look to external sources of information. So, for example, the company EcoAct, right? External consulting partners, software, technology of all sorts, the climate models that exist in the public domain. So, whatever you can do.
Yeah. Is this standardized, though? Are there going to be ways to quantify this? Because that has been a concern in the past when trying to measure environmental related items.
So it is not standardized. I mean, and that's where the contextualization really comes into play. And I thought you brought up a really good point. Like when we actually start working with a lot of companies, their enterprise risk management, we actually have to kind of train them on a new vocabulary, a new way of looking at risk within their own company. Because we are working with enterprise risk management. We don't want to reinvent the wheel. We just want to add more flavor to it and actually add the dimension of climate. And so technology, kind of going back to the kind of where technology and advisory kind of the marriage lies, is that there is a lot of technology where you can actually put in all your data. You will get outputs that say, okay, your buildings or your operational footprint or your supply chain has these sets of risks in these different areas. But it's the contextualization, because every company is different, and you really need to understand like how much are they exposed? Is that a strategic operation? Is that a strategic manufacturing plant? Is that a strategic raw material? And how that will affect their business at large.
And they don't want a black box, right?
Right.
So they can, like, you know, as you're saying, they can put their numbers in and they can use these models and the analysis, but they have to understand the assumptions and apply them to their own businesses and do some of their own prioritization.
Doron, how are you working with governments, regulatory agencies, other stakeholders to drive policy reforms?
Yeah, so this technology is already in existence in China and in Europe, South America, Australia. Essentially, the US is behind, and we're trying to become the leaders again. So we are advising to the FAA through a group called ASTM, and also to NASA. They're aware of it. They're very interested to work with us, and we basically are creating new standards, because this is a very nascent but sustainable technology, and they're very interested to learn. And in our case, we already have a vehicle that got certified, and they already started to understand the landscape, where the capacity, the capability. For example, in a situation, by the way, FEMA, you can set a swarm of Doronis and rescue people before and after a hurricane. So you can use this technology in the long run, like to protect, but also for the short, like, you know, rescuing, you know, situation of a problem like with hurricanes and other issues that might happen.
So the FAA would oversee. And do you need a driver's license, or how would you pilot one of these?
You'll have to have a shorter version of a pilot license, because it's a semi-autonomous system, very easy to control, like a drone, if you will. Even instead of two small joysticks, you have just one in our case. Semi-autonomous means that it reduces pilot's error, and also, you know, we don't have any moving parts beside the turning of the propellers, unlike a helicopter. So it's also less of points of failure in the terms of the aircraft itself, and not just in the pilot's decision making.
Yeah, well, and this is a technology that it doesn't sound like it's 5-10 years out. You were telling me earlier it could be even sooner than that.
Yeah, so there are two types of eVTOLs. One is for personal, what we do, and the other ones is for air taxi. The air taxi already tested here in February in New York.
We're trying to
oh my gosh,
city, right?
Yeah, and they're supposed to roll out next year, and we believe we're going to be 26. This is what this is as far as the regulations.
Oh, we have to launch it from Times Square.
Yes.
From right here, so we can.
But this is very easy, very already proven. It's just the natural evolution of the electric vehicle. Here we are.
Yeah.
But it's more than natural evolution, because I think a lot of businesses, they only think in incremental ways. They're not good at understanding kind of high impact, low probability challenges. It's very much, let's do a little bit at a time, let's do what we understand, but we really need some transformational steps as well to move this forward.
Well, let's put a time frame on this, not to be so black and white about it, but so for example, AI, everyone's familiar with what's happening with AI, and companies are just in a rush to have either some sort of product, revenue stream, and so forth. When it comes to what we're talking about here with climate tech and being in compliance with that, is that something that you see happening as quickly as the AI trend, or will it take companies years to transition?
Yeah, I mean, I'll start on this. I mean, basically with AI, I mean, there's going to be a lot more data that's out there because of regulation, right? Like the SEC, the pending SEC regulation, California, the CSRD, which is coming out of Europe, the EU taxonomy. There's just more data and there's going to be more focus on creating more models and data that goes into technology. So that's really going to be like the focus of like kind of refining, making sure it's as accurate as possible, but that it's just the wealth of data that we're really waiting for to kind of push the climate risk discussion
I think
forward.
there's a lot of data already. I mean, obviously it's going to be more. The question is, how do you analyze it? What tools are you using? You know, who are the
AI is going to be huge in that.
I think it's not going to be. I think it actually already is. So I think most people are not aware of the fact that a lot of the software they already use is using AI. So there are many types of AI. There is already AI baked into a lot of the software applications that we look at, the categories we look at. It's as little as a chat bot to help you more easily find information, to analyzing really large data sets like the computer images of where the wildfire is and where where it is not, and how do we put people in the right place to help combat.
And that's a
the wildfire.
perfect point to end. We have our next panel already ready. AI and the use of climate tech. That'll be our next panel. Appreciate everyone's insight. Thanks for joining us on Trade Talks. And thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.